welcome to my market report. My name is Mike, and if you're new to my channel or my videos, my market report is on mortgage rates. We go into what's impacting mortgage rates on a daily basis, whether it might be uh, impacted from economic data or headline news or some geopolitical item, or sometimes the sentiment in the markets just change, where sometimes good news is bad news and vice versa. And we're here to kind of explain those on a daily basis. So if you're in the real estate sector, you might try to figure out what's going on with where rates are going, trending, and what's impacting them. Or you could be a consumer maybe looking to buy a property or looking to refinance, and you're kind of tracking where rates are going. These videos could be good for you folks to learn a little bit more what's impacting or what rates are doing, and hopefully give you an informed decision whether if you're looking to refinance or purchase, to lock in or hold off a little bit. So hopefully these will give you some ideas. A little bit about myself is I'm actually a loan officer. I do work with a national lender, so we're here to answer any questions you guys might have or help you in any capacity. We do loans in all 50 states. So if you guys got questions about loan programs or or mortgage rates or any of these, again, we're here to help you guys out. Just contact us through the social media site you have heard about or you found us, and we'll definitely reach out to you guys. In the meanwhile, why don't we jump right into this? We'll start out with the economic data. We just got one piece of economic data today, and that is the inflation on the wholesale side, which is by the Producer Price Index, or PPI. So the month over month, the headline number forecast, this is for the month of November, so October it went up 0.6%. Forecast is calling for 0.5%, and it exceeded that up to 0.8%. Now, if you take out food and energy, you get what they call the core inflation, or core PPI in this situation. And that went up 0.4% back in October. Forecast calling for 0.4%, and exceed that again, 0.7%. So food and energy are not what's impacting these numbers here. So it's year over year went from a revision in October from 6.8 to 7%, and the forecast was at 7.2%. It jumped all the way up to 7.7%. So this is definitely impacting the markets, and not. This is normally a what they call the Rodney Dangerfield, because his little skit about no respect. But in this case, it is because inflation is on the market. Today we got the beginning of the Fed's two-day meeting, the FOMC. Tomorrow we'll get their announcement, and there's they've talked about already basically warned us that there's going to be some policy changes coming ahead, and that they're going to increase the tapering process. And of course, the reason behind that would be is so they can go ahead and raise rates sooner. And so the debate has been the pace of that, how much of an increase. With this hotter data coming out, this looks like they could be doubling up on there. So there was a recent survey that came out, I think it was CNBC's survey, and they're projecting that they're going to double up, finish the taper by March, and then start doing their first rate hike in June of next year. So, and then they'll have 3 rate hikes next year in 22, and then 3 more in 23. This is what their survey is projecting right now. We will know this more tomorrow after they give their announcement, and then we'll get a look at their dot plot, which will show the pace of their rate hikes, which is what the Fed members put down what their estimates are. So again, this is kind of market is reacting to it. Stocks are down, and as a result, mortgage-backed securities for the most part are benefiting from it, even though we're down about 9 basis points currently. We were down here a little bit further, have risen a little bit more, but we're still down from where we left off yesterday on there. So here's how it looked earlier today. We were way down here, went up, came down a little bit, came up. Now we're down a little bit again. So we're down about here. So we're off from the highs earlier as well. So let's go back and just take a look, see how treasuries are faring. And treasuries are up a little bit. They're kind of in the state here where it was under the 100-day moving average, and then it's been capped at their this technical level here, a ceiling right now. And right now it's just sitting under just 1.44 right now as a result. So that's pretty much the wrap today. Rates are about the same. What happened was earlier, the lenders came out with worse pricing, but since then, as you can see, there's been a few repriced for the better. Those are people who came out much earlier, and with the improvement, as you see here, from here to here, They probably got a little bit better pricing, but that better pricing basically will translate to about what we left out yesterday. So for the most part, will be a little bit unchanged. Will be closer to similar to what we closed at yesterday in terms of pricing. Now, let's take a look at the national average for conforming loan limits. Again, these do have points built in. 30 years at 3.17 today, and the 15 years at 2.52. Yeah, 2.52 right now. And these are national average for conforming. They do have points built into them. And again, if you've heard my other videos, we kind of talk a little bit about how one rate does not fit all for all people. So there's different loan programs out there with different rates. There's also variables, they all go together where it could be the amount of down payment or equity in a property. So depending on if you're buying or refinancing, that makes a factor with the FICOs, along with the if it's a primary residence versus a secondary residence or investment property, or and along the lines of a type of property, if it's single family, townhouse or condos, or even a multi-unit property, which is like your 2 to 4 units. They all they just take all those variables at one point and then decipher as to what your rate would be based on those criterias. All right, folks. Again, this will be a wrap. If you guys like these videos, please help our channel out and smash that like button. We greatly appreciate it. We appreciate you guys helping us out here. If you guys got questions, we're here to answer anything you guys have. Please go ahead and ask away. We're here. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.